bit about the most important part of your trading, which is your psychology. So psychology will either make you or break you as a trader. It's very, very important to understand that honestly most of your trading result will be directly correlated with your psychology. I don't think it's talked enough in the trading space. Everyone is trying to know different trading techniques, different technical tools to use to identify patterns on the chart. People try to learn their fundamental. Everyone's looking for some sort of strategy to perform in the market, but they forget the most important part. It's your psychology. Okay, because once you know how to trade, okay, psychology will be 70% of your trading work. Okay, what do I mean by that? I mean by, let's take two guys. Let's say this guy's name is Bob, and let's say the other guy, his name is Joe. Okay, let's say those two guys have been learning how to trade for about 6 months, maybe 1 year. They're familiar with the different technical tools. They're able to do technical analysis on their trading view charts. And let's say Bob has let's say a 85% accuracy rate when he does his trading on TradingView, when he backtests, or when he trades his demo account, for example. Okay, so 85% is pretty good for Bob, right? Let's say Joe is a bit less good with his technical tools, and he only has an accuracy rate of 65% when he makes his different analysis on TradingView, and he backtests and he tries to basically trade on the demo account, or just doing the analysis on his TradingView charts. Okay, so these guys are not trading live yet. They're only backtesting, trading on TradingView, doing technical analysis on TradingView, and this is their accuracy rate. Okay, now when they're going to transfer to a live account and start doing real life trades, that's where the 70% comes in. Okay, because when you know how to trade, when you know how to trace your support resistance, identify the trend lines, identify the different technical levels that are interesting to long, to short, and so on and so forth, the rest will be how you manage yourself, your psychology in your trading, when you trade your live account, basically. Okay, so let's get back to Bob and Joe. So let's say Bob is very emotional. He's very irrational. He doesn't have a good management, let's say, of his own psychology. When he gets into his live account, he will make mistakes. He will be impatient. He will rush into trades. When he has a loss, he will maybe try to revenge trade, force trades, and maybe his 85% accuracy rate that he had without the emotions, maybe it's gonna drop down to 30% accuracy rate when he trades on a live account. Okay, and let's say Joe here is more emotionally stable. He has, let's say, previous experience dealing with different businesses he built over his life. So, he knows how to handle his psychology. He knows how to be patient. He follows his trading plan. Always wait for the best possible price, or it doesn't enter in the trade. Follows everything, in the right order. Then Joe, when he gets to his live account, maybe his accuracy rate will be only 60% instead of 65%, but the difference will not be, drastic. It will pretty much be the same accuracy rate. Okay, so let's say this is demo or backtesting. Okay, or TradingView. And when you get to a live account, then the real number come in. That's why you see a lot of traders that are very, very good analysts. They are able to, dissect a chart, identify all the different technical areas, and basically, if they only traded on TradingView or on demo account, they would be very successful. But as soon as they get to a live account, that's where all hell breaks loose, and they lose money and they blow their account and they're not profitable. Okay, so that's why psychology will be and should be your main focus when you're trading. Okay, if you have a bit of experience, if you're taking the course right now, you're listening, and you've been trading for maybe 1, 2, 3 years, you have enough experience in terms of fundamentals, in terms of technicals. like I said before, everyone has the same trading tool. So you're not going to find a special type of secret. The secret sauce is going to be in your ability to manage your psychology and put the focus on this part of your trading. Okay, this is the most important part of your trading. Okay, you don't want to be like Bob, where you perform, greatly when you do your chart analysis on TradingView, and then when you get to your live account, you do mistakes and you end up, losing money. You want to be like Joe, okay, and slowly increasing. Maybe that 65% in 1 year or 2 years is going to be 70%, okay, as Joe gets more experience, okay, 75, and then maybe at a certain point he's going to get to 80% and is in his live account. Maybe that's going to be 75% if he's at 80%, when he's just doing his analysis on the TradingView. Okay, so that's why psychology is very important. Your patience, discipline, and endurance will determine your long-term success. End of story. Okay, so that's only the factors that will determine if you are going to be successful on the long term, if you're going to make it as a trader and trade for many years, or will you fail and basically trade for maybe a few months, maybe a few years, lose money, give up and go on and do something else. Okay, so your patience is your ability to basically wait for the best possible price to enter your trade, to basically do your chart analysis, do your technical analysis, identify the important level, and basically follow your plan in terms of your trading. Okay, the discipline part would be your ability to stay focused and basically follow your trading plan. Okay, so basically to not get emotional, no revenge trading, nothing that is out of your trading plan. If you decide to not trade the news, the headline news or the economic data news, well, don't trade it. Okay, and you basically have to apply that on the long term, and that's where the endurance part comes in. Because if you have good behavior in the market, you have to be able to keep that good behavior forever, basically. Okay, it's like a diet. Okay, you're trying to lose weight. You might eat correctly for a month, 2 months, 3 months. You lose 10, 15, 20 pounds. Everything is good. But if you don't keep that diet forever, okay, and you start eating back like you were before, well, it's only a question of time before you gain that weight back. Okay, so you have to find a way of working, and you have to find a peace in your mind and basically manage your psychology to repeat that positive process basically forever, for months, for years, for whatever, how long your trading career will be. Okay, if you're patient and you're disciplined for 1 month, 2 months in your trading and you have great results, and then you come back and you start to maybe have something going on in your life that is out of your control, and you start to basically not follow your trading rules. You basically start to revenge trade. You're impulsive. You're not patient. You're not waiting for the best price. Well, basically the endurance part in that case would not be respected. Okay, and of course that will hinder your performance and your success in your trading. Okay, so all 3 elements are very important in your trading. Now, number 3, some trading weeks are amazing, market is cooperative, levels are respected, and trades are flowing nicely. Okay, so those trading weeks are trader friendly, market is cooperative, that's where we want to trade. Okay, other trading weeks, levels are non-reactive, market is choppy, irrational, price action doesn't really know in what direction it wants to go, fundamentals are not making sense, you just have a sense that the market is not really clear. Okay, and I'd say those trading weeks you must not trade at all. You have to basically take a step back. You can still observe the chart. You can look at your fundamental and your trading view every day, but just in terms of observation to understand what's going on and try to figure out, okay, is it starting to make sense, or is the market still choppy and irrational? Okay, but are you gonna be making trades in that type of non-cooperative trading week? No. Okay, so you have to learn to distinguish those types of trading weeks and adjust your psychology. Okay, if you're not feeling in sync with the market, come back later. Most mistakes are made by impatience when the market is non-cooperative. Okay, so this is a very, very important aspect. As traders, we always want to start a week, okay, and try to find trades, try to accumulate pips, make money. So at the end of the week we can say, okay, we had a good week, and basically we have progressed and we have advanced on our journey, okay? However, sometimes not trading and being able to understand and see and distinguish those type of trading weeks that are not good, that are basically irrational, that the market does not make sense, that are not trader friendly, is also very important as a trader, because you will be saving yourself a bunch of stop losses, you will be saving yourself a bunch of loss in your trading account. Okay, so this part is very, very important. So you need to learn to make the difference. And I would even say that most of the trading weeks, okay, are non-cooperative. They are going to be irrational. I would say during a year, if let's say there's 45 trading weeks or 46, 47, I don't know the exact number, but let's say on 100% of the trading weeks, I would say at least 60% of those trading weeks are going to be irrational, market choppy, institutions not really knowing in what direction they want to push the price, and not being trader friendly. Okay, and of course market will be sweet and nice to us 40% of the time. Market will be cooperative in those types of trading weeks. Okay, so you see, most of the time the market is not going to be cooperative during your trading week. Okay, so most of the time you should be in observation mode. Okay, and when you understand 100% what's going on, when you see that the levels, okay, that you're waiting are reactive, when you see that the market is trending, when you see that the fundamentals are making sense with what's going on, when you understand the whole narrative, when you understand the whole story of the market, that's where you want to trade. Okay, if market is choppy, okay, if you're waiting for a level and we leak under it and comes back and consolidates and it goes up and next day comes back down and it doesn't make sense and there's no structure and it's irrational, well, you have to learn to identify, like I said, those types of week and basically not trade, just observation. Okay, so that's very important.